Hello and welcome to Islamic Finance Weekly. I am Rahma Say Muhammad. If you're joining us for the first time, Islamic Finance Weekly is a program dedicated to shedding more light on ethical finance, Islamic finance, alternative finance, social responsible finance, or however way you would like to call it. So for these few weeks in this month, we'll be taking you down strictly on ethical or Sharia compliant investment. Islamic banking, also referred to as Islamic finance or Sharia compliant finance, refers to financial activities that adhere to Sharia, that is Islamic law. Two fundamental principles of Islamic banking are the sharing of profit and loss and the prohibition of the collection and payment of interest by lenders and investors. The principles of Islamic banking are derived from the Quran, the central religious text of Islam. In Islamic banking, all transactions must comply with Sharia, the legal code of Islam based on the teachings of the Quran. The rules that govern commercial transactions in Islamic banking are referred to as fiqhul mu'amalat, that is, dealings or relations between people. The first experimental local Islamic bank was established in the late 1950s in a rural area of Pakistan, which charged no interest on its lending. In 1963, the first modern Islamic bank on record was established in rural Egypt by economist Ahmed El-Nagar, setting up the Montgomery Savings Bank to appeal to people who lacked confidence in state-run banks. Now, this is the interesting part. Research has also shown that ethical investing, as we understand it to be, also began with the Quakers and Methodists, making moral choices about where they invested their funds. Back in the mid-1700s, these groups chose to avoid investing in the slave trade and industries like tanning and chemical production. It was, however, many years later in 1971 that the first ethical fund was launched in the US with the mandate to avoid investments that would be associated with or benefit from the Vietnam War. The UK was somewhat slow to respond, with Friend Providence launching the UK's first ethical unit trust in 1984. However, the Islamic Bank of Britain, which is now known as Arayan Bank, was the first Islamic commercial bank to be established outside the Muslim world in 2004. And by 2008, Islamic banking was growing at a rate of 10 to 15% per year, and continued growth was forecast. There were over 300 Islamic financial institutions spread over 51 countries, as well as additional 250 mutual funds, complying with Islamic principles. Worldwide, approximately 0.5% of financial assets were estimated to be under Sharia-compliant management, according to The Economist magazine. Now in Nigeria, there are 4 full-fledged ethical compliant commercial banks, namely Taj Bank, Jaiz Bank, Alt Bank, that is Alternative Bank, and Lotus Bank. There are also several investment capital ethically compliant firms, some of which are Marble Capital, Lotus Capital, Trust Arthur, Capital Trust, 117 Capital, and the likes. There are also insurance companies, that is Takaful. We have Nu Takaful, Hilal Takaful, amongst others. Now, having established a background knowledge on ethical transactions and investment, our next edition would be engaging the public to find out how aware people are of these unique offerings. And with that, I say, don't forget to keep it today with us next week on the program. Follow us on all our social media platforms displayed on the screen. Thank you for watching, and I am Rahma Say Muhammad.